Welcome back to MTC Radio. It is time for your Sunday weekly recap and prep for the week of January 2026.
Yeah.
And, if you just glanced at your portfolio this weekend, you might be scratching your head. The big indexes look flat, calm, almost boring. But if you were actually glued to the screens this week, we just lived through the single worst day of the year so far.
That's it, exactly. Looking at the weekly close is a classic case of the averages, lying to you.
Completely.
So I think our mission for this deep dive is pretty clear. We need to strip away that surface level noise.
Okay.
You have to figure out how these headlines are whipping the tape around. But more importantly, why being selective, being picky, is really the only thing that's working right now.
Okay, so let's just rip the Band-Aid off then. Tuesday, it felt like the floor just fell out from under us. What actually triggered that chaos?
It was a textbook risk-off day. Just pure panic.
It really was.
And it was almost entirely headline-driven. We saw those renewed tariff threats coming from President Trump, aimed squarely at the EU and, NATO allies.
And that's all it took.
When you throw that kind of geopolitical grenade into an already jittery market, the algos just hit sell. There's no thinking involved.
It was brutal to watch. The S&P, the Dow, the NASDAQ. I mean, everything just went deep red. We even flipped negative on the year for a moment there.
For a minute, yeah.
But then the bleeding just stopped. Midweek rolls around and the panic just vanishes. Why? What changed?
Well, the story changed. The rhetoric around those specific Greenland-related tariffs started to cool down a bit.
Okay.
Plus, we got some inflation data that came in steady. It didn't look scary. So that combination, less shouting and some steady data, that was enough to calm everyone's nerves by Wednesday.
Which brings us back to that weird contradiction I mentioned. Despite Tuesday feeling like the end of the world, the NASDAQ finishes the week down, 0.1%?
Barely a scratch.
And the S&P down 0.4%. I mean, if you slept through the week, you would think absolutely nothing happened.
But that flatness is so deceptive. This wasn't a broad recovery. This wasn't a rising tide lifting all boats.
Not at all.
It was a massive, violent rotation under the surface.
Yeah.
If you were holding cyclicals, so sectors that need a strong economy or anything rate sensitive like financials, real estate, you're still hurting. They did not bounce back.
So if the money fled those sectors, but the market itself stayed flat, where did all that cash go? It didn't just go to the sidelines.
Exactly. It didn't leave the casino. It just moved to a different table.
Right.
The money poured into energy, specifically natural gas and oil names. We saw a pretty strong bid in materials like packaging stocks.
Yeah.
And, of course, the defensives.
Classic safety plays.
Yep. Healthcare, consumer staples. When traders get scared, they go buy toothpaste and medicine stocks. It's almost a cliche at this point.
And it wasn't just the sectors, was it? It felt like a few individual big names carried a ton of weight. You had Intel's guidance just crushing sentiment in semiconductors.
Oh, it was an anchor on that whole group. But then you have a name like Microsoft that steps in.
And saves the day.
Right, and stabilizes the whole large cap space. And that sort of tug of war brings us to the framework for this coming week.
Okay, let's pivot.
Those geopolitical headlines, they still matter. A single tweet can still tank the market for a day.
Yeah.
But the main driver is shifting now. We are walking straight into the heart of earnings season. We're waiting on the mega caps and the Mag 7.
So boil it down for us. What's the actual play here? What's the key takeaway?
The bottom line is this. Money is rotating, not committing. The market is hovering near record highs, which is, impressive in itself, but that momentum is incredibly fragile.
Right.
It now depends entirely on earnings guidance. We are not trading on macro hope anymore. We need to see the actual numbers from these companies.
Sounds like a market where you can get really chopped up if you aren't paying super close attention.
Absolutely. If I can leave you with one guiding principle for the next 5 trading days, it's this. Trade what you see, not what you hope.
Don't be a hero.
Exactly. Don't try to anticipate the breakout. Just wait for confirmation.
And that's the discipline part. But knowing the principle is one thing. Actually executing on it when the candles are moving fast is something else entirely.
It is.
To really implement this kind of framework, to navigate this, you need to be where the action is. And that means you need to join the Meta Trading Club.
It really is the best way to handle this volatility. We're not just talking about these rotations after the fact. We are tracking this stuff in real time.
Exactly. So consider this your personal invitation. Come join the community at the Meta Trading Club. We'll help you navigate this earnings season without getting wrecked by all the noise. We'll be breaking it all down day by day in the pre-market. Thanks for listening to MTC Radio.
See you there.